Hi, I'm Kevin Castaneda. In this Kevin's Mindset, we talk everything finance, investing, mindset, and productivity. And in this video, we're going to be talking about why I think that the market will stay down for a while. So, back a few months back, when inflation started becoming quite persistent and it started getting higher and higher as the Fed continued to print money, the Fed said that they thought that inflation would be temporary and that it would come and go and eventually it would subside, and that they didn't think it would last too long. Now they've somewhat revised this statement, and they've started to say, okay, we think, yeah, it will go down. We don't think it's rampant inflation, but they keep pushing the deadline of it going down further and further and further and further away, to the point now where they're saying, yeah, it's probably going to last until 2022 and maybe a little further through 2022. And yeah, they're right. That doesn't mean it's rampant inflation, but they are saying that it will be persistent for a pretty noticeable period of time. And now when we look at this, we're like, okay, the Fed saying one thing, and then as time goes on, they just kind of change their statement little by little. And I love Jerome Powell. I think that he's a great chairman for the Fed, and I think that he has pretty good insights, and he does a great job at his job. But now that we're looking at the market, we're finally starting to get a dip in the S&P and the NASDAQ and kind of falling off these all-time highs that we were sitting at. And with this, we look at the market and we're like, okay, how many fears are there in this market? And are these fears that we see in the market bigger than the potential upside for the market? And what I think right now is we have the fear of inflation that the Fed clearly thinks is going to continue for a pretty substantial margin of time. So we have inflation. Then we have the chip shortage and just supply chain constraints in general. And at first we're like, okay, these will fix themselves with time. But what if they don't? Because a lot of people aren't taking into account the fact that Delta may prove to be a very detrimental factor to the U.S. economy and just the countries around the globe. When winter starts to hit us, as weather gets colder, people tend to get sick more, and when people get sick more, and when people are more vulnerable to sickness, Delta will be more apparent, and Delta will be easily more transmittable for people around the globe, and especially, and more importantly, the United States when we're talking about US stocks. So with that, we are looking at a few risks. We have a current risk, Evergrande, we have a longer term risk, inflation, and we have a mid-ish term risk of Delta. And all these three things together, I think, and we have the debt ceiling and all these things also, but those are more pushed to the side. These three things I think are like the big things that can really affect our market. And they're kind of the three biggest catalysts for how our market performs. They could either be a catalyst to the downside or a catalyst to the upside. If vaccines and vaccine boosters prove to be as powerful as they are kind of said to be, then we will be able to fight off Delta, and Delta might not be as big of a deal in the winter as some people anticipate. Then with inflation, maybe inflation doesn't continue for so long. Okay, then maybe Delta doesn't affect supply chains as much and doesn't dampen earnings as much. That's another factor. Then on top of that, maybe Evergrande's thing is not as complicated. Maybe the government bails them out. Who knows what's going to happen? But the bottom line is there's a lot of risks floating around us in this market. And it's kind of like you're a fish and you're swimming around very peacefully, and there's these three sharks. There's one pretty close to you, there's one kind of medium far away from you, and there's one pretty far away. And now let's say maybe you escape the close one. Now you escape the close one, but now you're closer to the middle one now that you escaped the close one. And now you have to try and escape the middle one. Let's say somehow you escape the middle one. Now you're at the far away one. Can you escape that far away one as well? Now the probability of you escaping all three without at least a cut, a bite, or whatever is quite low, I'd say. So if we look at the market and we say, okay, can we get away from all three of these risks and downside catalysts without any cuts, scratches, or potentially just dead? And I don't think we can. I think we will get some sort of downside from all of these. I think that they will all accumulate, and I think that the fear will be worse than the actual thing that happens, but that's just how the market is. And I think that fear is the perfect catalyst for stocks moving down. And we're already seeing the precursor of that. We're seeing we're seeing the NASDAQ and the S&P drop. We saw a 3% drop in the NASDAQ yesterday. We saw a following of that today. And we're kind of looking at all these stocks now and all the indices, and we're saying, okay, what is gonna happen? And I think everyone's thinking the same thing, because at first we were getting very small drops, and every time we got like a 2-3% drop in S&P or the Nasdaq, it got bought up right away, and then we were green again for the next week, 2 weeks, 3 weeks. But now we're seeing, okay, we saw that drop, then it bounced right back, then we saw the drop again, and now this one, it didn't bounce back the next day. So we kind of broke that cycle. Then we dropped the next day, and we're like, huh, this is new. And I think this sets us up in a new place where we're looking at the market as a whole and saying, okay, are we going to continue to drop down over time? And is it going to be a slow bleed down till we bounce again? Or is it just a few day thing, maybe this week, and then bounce back? Or are we heading back towards that March and April point where we saw tech sell down slowly over time, and then big drops, then small spikes up, and then dropping below the spike before the previous spike? So we saw that in March and April. What I'm wondering is, are we starting to buy the dip too early? Is this potentially a longer term dip? I don't think till 2022 personally, but I think that we might see maybe a month dip. Who knows what's going to happen? Obviously, the market is, you can't guess what the market's going to do tomorrow, let alone next year, except for like maybe a specific company. But that's completely different because you have statistics and a lot of things to base that off of. But when you look at the market, it's kind of a tricky place to be in right now, because you obviously don't want to miss out on the potential gains, but you also want to get in at a decent value so that the lower price you get in, the more it has a potential to appreciate, correct? So I think looking at the market, what I'm thinking is, I already have a lot of my positions set. I'm continuing to dollar cost average into positions. What I'm excited for is that the fact that maybe we see a 2-week drop and we actually hit lower points, that would allow us to buy the dip at a much lower price and have those great companies that we love at a discount. I would personally be very excited for that, and I think it's a very interesting market that we're in. I'm interested to see how these short-term, mid-term, and long-term kind of downside catalysts affect the market. I think there's a lot of scenarios that could play out. However, I think that the most viable, in my opinion, would be, we have these past 2 days, we're kind of a dip. Maybe we get until Friday where we get a dip. Maybe on Friday we get a small resurgence back up, and then we continue and see where things go. But I don't think I can estimate next week and the week after that and the week after that and the week after that. I think that would be too difficult to kind of play out. However, I don't think that this is going to last forever. And I think that if we do get this March and April style kind of dip down day over day, day over day, day over day, keep going lower, I'd be pretty excited for that, as I could continue funneling money into the companies that I love and continue to build out those positions for those companies. So those are my 2 cents on this. Let me know what you think about it in the comment section down below. Feel free to smash the like button if you did enjoy, and subscribe if you do want to watch more of my content in the future. Thank you so much for watching up to this point, and I'll see you in the next one. This was Kev's Mindset.